Okay, guys, let's take a look at Air Canada. I got a lot of Canadians out there watching. I'm a Canadian myself, and I'm going to try and incorporate more Canadian stocks into these videos. And what I've been doing now is I'm focusing on one or two stocks at a time or a few sectors at a time instead of jumbling everything up into a couple videos. So let's take a look at Air Canada over here. Air Canada looked like what appeared to be a potential bear flag, but it was negated. And negated means the bear flag didn't play out. So you probably had bears piling in, thinking and hoping that it was going to break bearish and head lower, potentially to that 200-day moving average, but it didn't. And they got squeezed today. Bulls had a decent push to the upside today. The bulls broke the resistance up here, and you see it gapped up. It didn't fill that gap this morning, showing strength above the 4-day moving average, and bulls just ran with it, squeezed the bears, almost ran directly to the middle daily Bollinger Band. So what are we looking at now? This daily chart was just all bear before, and then this bear flag that didn't play out, and failed bear patterns are considered very bullish, and failed bull patterns are considered very bearish. Because essentially, like I said, you had a bunch of bears piling in, hoping it was going to break bearish, and it didn't break bearish, and now they're getting squeezed. Now, what we're looking for is we're really looking on this weekly chart, because this daily chart, we're going to see if we can run more. I think if we gapped up, we could potentially see more of a squeeze tomorrow. But then we get a little bit overextended. Let's take a look at the shorter term time frames. A little bit overbought on the hourly, but not really overbought. Let's take a look on the 4-hour. Not overbought yet. So it could still run more before seeing a short-term pullback. Let's look in the weekly. And the weekly is interesting because we have an equilibrium on the weekly where it was on an uptrend, but then you had this high, low, lower high, and now we got a higher low. So we're looking to see a potential run upwards of this resistance area, which is around $29.17, a potential run upwards of there. And you can buy with a stop loss below this recent low, $25.11. It's not too far off. It's $26.98. And look to sell around this orange line below this support area. Can it continue? Absolutely. But what you do is, since we're in an equilibrium, you're trying to trade this tightening action. If it does break this resistance area, then of course we'd be looking at this high up here around $31. But what you do is you sell before this resistance, secure your profits, let it form some healthy consolidation or break that resistance, hold it as a support, and then you re-enter. It's okay to sell and then buy back a little bit higher. What you want to do is you want to make profits. As long as you're making profits, you got to be happy, because you're never going to buy right at the bottom and you're never going to sell right at the top. I mean, it can happen, but it doesn't always happen. Now we look on the monthly, and the monthly is still an uptrend on Air Canada. So if you're a long-term holder and you're not trying to play these games, you're still in the clear on the monthly. You have the low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And bulls are looking to set another higher high and push upwards of this upper monthly Bollinger Band. And we take a look at the sector as a whole. Let's take a look at LOVE, Southwest Airlines, because this is one of the biggest airline companies. And what's interesting is that it went almost to all-time highs that were set before coronavirus. The all-time high was actually from December 2017. It didn't pass that yet, but it got quite close. It passed the high that it was before coronavirus, which is notable because Air Canada is not even close to the high from before coronavirus. The thing with Southwest Airlines is that their balance sheet and their financials were much better than Air Canada, whereas Air Canada, they had to do a lot of dilution and raise a lot of debt and stuff just to stay afloat. And that's going to stick with them for a while. And that's going to provide a little bit, or maybe even a lot, of pressure on the stock. But the stock is doing well overall. There's no real red flags on this long-term chart right now, and it's looking pretty good. So short-term traders look to trade the potential equilibrium, look to trade this potential squeeze, but exercise a little bit caution just because it's getting a little overbought on the hourly in the short term. But we could be looking at a 50% retracement from this big pullback, and a 50% retracement probably be around that $27.50 mark before we see a potential short-term pullback and consolidation before we decide that next move. But overall, long-term wise, it is gaining some traction. We are getting those higher lows and higher highs on the monthly chart. And if you look at love, it almost recovered fully from the It did recover fully from the coronavirus dump. Now it's looking to potentially move up to set all-time highs. It did have a decent pullback recently, though. But bulls are trying to set a higher low on the monthly chart on Southwest Airlines. So it doesn't look like they're totally correlated because Southwest Airlines is a lot stronger than Air Canada. But nonetheless, they are still somewhat correlated. So you want to keep an eye on what some of the other airline stocks are doing. And thus far, the long-term holders don't appear to have anything to worry about at the moment. So thanks for watching. I'll drop more Canadian stocks soon. This is not financial advice. I'm not providing alerts. I'm just saying my thoughts, opinions, and analyzing these charts. Thank you for watching. Remember to like, comment, subscribe, share, tell your friends, and check out my Instagram as well. Thanks.